you yourself played the devil's advocate, saying high churn often I'd say
Hmm.
is looked down upon because of obviously slippage costs
Yeah.
and transaction charges. But you
Yeah.
also said that after your research, you've realized 1 month or a monthly rebalance actually optimizes your return.
Yeah.
But can you do some very basic math for me? Are you trying to theorize that the alpha, let's say, or the returns that you're able to generate by those monthly rebalances is actually greater than the cost that you incur? So on a net basis, as an investor in a portfolio which is, let's say, rebalancing at a monthly frequency, you're better off than going for a buy and hold. Is that what you're theorizing?
Yeah, exactly. And the results are there for everyone to see, right? So if you look at the returns of last 1 year or 3 year, whichever you want to have a look at, let's say last 1 year only, right? You're given, I think, more than 25% returns. So the actually alpha that we have produced at that is quite substantial, right? And that is there for all the periods. Now we have been live for more than 3 years now, and in last 1 year, in fact, we are closer to 40%, whereas the multi-cap index is just about 10%, right? So this around 38 to 40%, what I'm speaking about, this does not include the slippages and everything. But even if you include the slippages, this will still come out to be above somewhere between 30 to 35%. So overall, it's quite substantial alpha we have been able to generate. And see what happens in a buy and hold strategy. I'm not saying it's bad. It's just different than what we are doing. So nothing is right or wrong. It's just different way to invest, right?
Yes.
So the way we are doing this is because we are using these quant strategies, we are able to analyze a lot more data. So let's say a fund manager who is having a team of analysts of even 5, 10, whatever number of analysts, uh, the way they analyze stocks is quite different, right? And they will never be, again, I'm saying different. I'm not saying one is inferior or superior, but the way they analyze stocks, they'll never be able to analyze the kind of data that we are able to process using these quant strategies. And because we are able to process so much of data, we are able to see, or we are able to maybe predict what are the stocks that are likely to work in, let's say, next 1 month.